Good day, dear investors. It's my pleasure to welcome you from office of Orion Securities. And today we have a webinar during which we want to present you opportunity to invest in bonds issued by local Lithuanian real estate developer, KAITA Development, which is a part of a larger group holding, KAITA Group. And besides me, myself, I am representative of investment banking division here at Orion Securities. We also have representatives of the issuer. So we have Vilius Morkūnas, who is a founder and board member of the group. Also, we have Dalius Kaveckas, group CFO and also board member. We have Mantas Rimkus, finance director of the issuer, and also Jonas Izokaitis, who is investor relationships, head of investor relationships at KAITA Group. And before giving floor to representative of the issuer, I'll make just a short introduction into the bond offering we are representing today. So KAITA Development and I would say KAITA Group as a whole is not a newcomer in the Baltic capital markets. Actually, the same issuer has issued bonds in the year 2024, which was successfully redeemed in this September. So this is already a second issue. Also, the sister company of KAITA Development, KAITA Living, which is undertaking a bit different angle of real estate. That issuer is managing rented apartment portfolio, co-living portfolio. Has also issued in the summer another 8 million bond issue. With this offering, KAITA Development, which is an arm of KAITA Group responsible for, well, mainly developing residential real estate in Vilnius. It is issuing up to 4.5 million bonds, which are planned to be placed in two separate tranches. So the tranche we are offering now, the size of it is up to 3 million euros. Annual coupon rate, which is offered to investors, is 10.5%, paid out semi-annually. Regarding the security, we have a pledge collateral formed from two types of assets. So first one is first rank pledge of subsidiary project company shares. So 100% shares in Namų plėtros projektai, which is behind real estate project called Moods, and also 100% of UAB Miesto Forma, which is a SPV behind project OFF. Besides that, we also have a pledge of receivables from a sister company, KAITA International, which also is developing and has already operating assets in various countries, Latvia, Riga, London, Prague. They are developing and operating also co-living type co-living type real estate projects. So receivables from this arm is also offered as a security for investors. And the maturity of the bonds is 2 years. So more or less in line, maybe a bit shorter maturity from common, which is 3 years. Maturity is most common in our market. Proceeds would be used to redeem already previously taken loans, and part of it, minority, would be channeled for financing working capital needs of the group, which are of course related to real estate projects being developed at the moment, about which we will talk later. Shortly about KAITA Development, what I have already touched, well, basically it is a development arm of KAITA Group, focusing, as mentioned, on residential projects, and now all projects are located in Vilnius. Even talking more specifically, actually, it's in districts close to the center, so districts with, I would say, high demand. We could call it not prestigious, but superior economical maybe segment. So not central locations, but close to the center. So locations which recently really are showing high demand in the capital market. If looking at the revenue structure of the group, we see that this year, so 3 quarters of 2025 are showing revenue increase, which is of course related to overall tendency in Lithuanian real estate market, that this year is marked by higher transactions, higher quantities of flats being sold, which is of course related to easing of monetary policy and interest rates going down after several years of being in a really high level. In the balance sheet, what's worth pointing out is shareholders' equity of the issuer. It's more than 20 million euros. If we include in that also subordinated shareholder or sister company loans, which amount to 9.5 million euros, we have equity ratio above 40%. And also worth mentioning that one of the covenants is making sure that this equity ratio stays above 30% level. Terms and conditions, most important aspects I have already mentioned. So regarding maturity, what's worth noting is the early redemption call option, which is provided to the issuer. So issuer has a right to redeem the bonds after 12 months with a premium. If it's redeemed, then we have 6 months or less remaining till final maturity. The bonds could be redeemed without any premium. We have such structure to make it in line with expected sources of redemption, which are related, of course, to real estate, mainly real estate projects being divested. So if issuer is able to divest it earlier, we have an option to also redeem the bonds early. Offering is pending till next Thursday, so 18th of December. And the issue date is 23rd of December. Regarding allocation, it is provided to the issuer to decide regarding the allocation. But in general, pro rata principle would be applied if we have an oversubscription for these bonds. And finally, of course, liquidity and listing. As for most bonds in the Baltics, it becomes more a rule that the bonds will be listed on Nasdaq First North Exchange within 6 months, but realistically, I would say that it would be sooner, most likely early January. Also, what I have not mentioned, if you have any questions, please submit it in Q&A section. Yeah, we'll cover it after we go through the slides. Use of proceeds, so indicating already amounts. So out of 4.5 total program size million euros, 4.2 would be used to refinance already existing debts, and 300,000 would be used to finance further development of real estate projects the company is developing at the moment. Regarding sources of redemption, we have, let's say, 2 alternative. Primary source most likely is of course related to real estate projects. So I will invite Jonas most likely to cover that.
Thank you, Mykandai. As you can see, there are 2 sources of redemption, so primary sources and additional sources. And I could say primary sources are the ones which most likely will cover and do the job. So we have 2 objects built to sell, Newton and Off. Those 2 objects has similar timeline to the bonds, up to 2 years. So we see that the construction schedule is on 2027 first half. So we have plenty of time to do the sales and everything. So we start early. And we have apartment sales of 41%, and all along we expect to contribute from those 2 objects up to 8 billion euros. And we have additional sources, international projects, so Kainavo Living, Czech Republic, and V38 Latvia, both centrally located. And we have done all the preparations for exits, signed intermediaries agreements, and done all of that. So we see that 2 years timeline as perfect fit for that, and we have 2 options to buy as a whole object, as a rent income generating object, or to sell unit by unit if we see that it's more profitable. So
just to add a bit, Jonas, what Jonas mentioned, in the primary sources, just a few things. What I think is very important, that a Newton project and Oak project, they already have the building permits, and the construction part is already in the not the early stage, but in advanced stage. So, and this 40+% of the apartments sold, it's quite higher than we expected, actually, from our timeline. So that's the one part. And the second part about the additional sources. So next quarter we will ready to be in the market to find out which is the best way, as Jonas mentioned, to make an exit for the both of these properties.
So key dates indicated, mentioned already. Offering is spanning till next Thursday. Then, of course, we have a semi-annual coupon payment, and early redemption is possible from 23rd of December 2026. So after 12 months, final maturity is in the December of 2027. So after 2 years from the issue. Before continuing with talking about the issuer and the group, key investment highlights which we want to mention is, of course, firstly related to the experience of the company as a development arm of the group. What's worth mentioning is that the company is specializing in Vilnius residential real estate, and if counting by sales, this year it has been quite successful, and the developer is one of the most active seller of residential properties of flats in Vilnius. Of course, another point worth noting is that it is a part of larger group, so KAITA Group, which has other businesses diversified both in a business model. So KAITA Living, which is owning and operating the largest residential rental portfolios in Lithuania and Vilnius, so 555 units. And the geographic diversification, what we have already talked about, is KAITA International, which has projects both in Baltics and further away in London and in Prague, Czech Republic. Regarding diversified financing structure, so the company has a majority of debt and equity investors, a number of equity and debt investors, both banks for senior financing, also equity partners in some of the projects being developed, and also private debt and equity providers. One worth noting and quite well-known brand here in Lithuania is Haner, one of the largest developer of various types of real estate projects, and it is financing already several projects developed by the group, and kind of a long-term returning partner, which is also a stamp of appreciation by such experienced market players. And finally, of course, collateral structure, as mentioned, 2 sources, 2 types of assets are provided as collateral. One is SPV shares of the projects which are being developed, and also receivables. Also in covenant structure, we have obligation, so financial covenant, which talks that till end of 2026, value of bonds issued divided by the value of collateral. So loan to value ratio has to be smaller than 60%, and starting from 27, when the projects are more advanced, stricter requirement is in place that 50% LTV ratio should be maintained, meaning that at all the times this value, net worth value of pledged collateral should be at least twice the size of the nominal value of bonds outstanding. So yeah, now I'm giving the floor to the company.
Great, thank you. Just to moving more deeply about the KAITA Group structure, what's briefly Vygantas just announced. So our KAITA Group is a two-way business, you can say. One business is build to sell model, and another one is build to rent. So the KAITA Development, the more than 8 years from now, is focusing on build to sell model schemes. And so this is our core business. That's what is started, how started the KAITA Group from KAITA Development, and what we think are the most know-how and competences is built in KAITA Development. And from this part of our business, other areas developed. So another one, as Vygantas mentioned, is KAITA Living, and it holds all the co-living, co-working, and build-to-rent apartments in Vilnius. And all the properties are mainly in day-to-day operation stage, and the management is working with the best strategies for all of the properties to make an exit in the best way in Vilnius. The third part is KAITA Operations, and this is the company which is focusing on the Houston brand, how to, in the best way, operate our micro living, our co-living, our co-working properties, and doing this in Lithuania, in Riga, in Czech Republic, in Prague, and waiting for near the future to join in London with our another property. One just thing to add about KAITA Operations, regarding KAITA Operations, a few months ago, our brand, Houston brand, was nominated and won the international awards for the best co-living operator. So we have some knowledge, you can say, and right way to establish our not just the portfolio, but an operation day-to-day model. So the fourth subholding is KAITA International, and it's developed to develop co-living, build to rent, properties in abroad, and operate organized operations of these properties. So right now we have properties in Czech Republic, as Vygantas said, in Latvia, Riga, in Czech Republic, Prague, and right now in United Kingdom, in London, one property which is on the construction phase. So all around the two main areas, one build to sell, another build to rent. And few things to add about KAITA Group, that as I mentioned, two main areas, and regard to that, our work right now, we can say that in Lithuania we are in top 10 with among other developments in sales, top 3 among the unit number of what we are selling right now, and the biggest, as Vygantas said, the biggest co-living owner and operator in Vilnius, and the recognition as a best operation company internationally for this year. So that's what we already done, and we keep moving forward.
Hello, everybody. I would like to focus in this part regarding KAITA Development projects. I would like to emphasize that KAITA Development is actually at the very core and the start of the company, because residential real estate development projects have been, from what the company started. Behind, there are already 26 completed real estate development projects. And moving forward, in our pipeline currently, there are 5 projects, which represent roughly 59,000 square meters. What is characteristic is that 80% of the portfolio, of the development portfolio, already has building permits. 20% of the volume is in the planning and preparation stage. One important element in development portfolio is sustainability, because our 2/3 of our development portfolio is related to property conversions. We are focusing very much on the parts of the city, of Vilnius city, where infrastructure, quality, service, range, shopping, and social infrastructure is increasing. So getting specifically to the projects in our pipeline, I would like to start from project OFF, which is located roughly 2.5 kilometers away from central business district, but we could say in a new and emerging business district, because that is the location where a couple of Lithuanian unicorns are located: Tesonet, Surfshark, Vinted. These are the companies which are creating certain cluster environment of software developer, cyber security companies, which are in a way creating a lot of attraction for young professionals who are working in these companies. And it's not a coincidence that we have picked this location to develop a 242 apartment property, from where we expect roughly 33 million in revenue. This project already is very much attractive in the market, as 41% of units are already sold, and we are creating not only square meters, we are creating quality of life, because we are in every single project we are including greenery within 4 cars around our building, so that the element of quality of life becomes very obvious and seen. The next project is located in roughly 3 kilometers away to the eastern part of the city, very close to the forest areas and park areas, and is very well known for as a biggest residential district. We call this project Moods, and one important feature to that project is that we have developed both in exterior and the interior of that project in cooperation with the neuroscientists from Vilnius University, who have contributed in their own way, so that quality of life and good solutions are seen and felt there. We plan 204 units to be developed and sold, and it's already 68% of units are sold there, and we are expecting roughly 22 million in revenue from this project. And construction has already been progressing very positively, as 69% of the property is already completed. The third project is related to an area which is roughly 2 kilometers away from a central business district, very close to the ring road of Vilnius city. Ring road has created a certain circle effect, in the sense that a lot of business offices have been developed in this part of the city due to easiness of transportation and availability of health, social, and educational infrastructure around. And in this project, we are planning 2 towers, where 238 units are going to be developed. We expect roughly 34 million euro in revenues from that project, and it's going to be done in a couple of stages. This project is a high-rise project, which is rather an exclusion in Vilnius city. Nice views and the square and park next to the building is creating its own attractivity, and that's why it's so popular among young families and young professionals who are working in central business district. If to look at the projects which are under development, those 2 projects which you see here are undergoing project planning and preparation stage, but they are in a certain sense element of scaling of existing projects. As you see, there's this Newton second phase, which is basically an extension of already very popular, very highly demanded product of Newton first stage. And here we are expecting 60 apartments to be developed and revenue of 7.1 million euros. And this property is going to enjoy the infrastructure which is already in place, and we know this environment, we know the infrastructure there, and the people who are looking after apartments in such a location. Another project which is undergoing preparation and project stage, project permitting stage is off stage 2, which is again placed in the area which I mentioned. It's as we call it, unicorn district, and we expect 122 apartments to be developed there, to be generating roughly 21.5 million euro in revenue. And as we already know, the demand in this location and infrastructure in this location, it creates us benefits because we are working effectively with the second stage of this project. If to look at the overall map where our projects are located, I would emphasize the element that the biggest part of the biggest share of in terms of apartment numbers and square meter volumes is located in project off, both first and second stage, which is Naujamiestis, which is new city, which is very close to the old town and close to the central business district, and it is developing as a certain business districts in itself because of the unicorn companies. So roughly 43% of all the volumes of ours are concentrated here. Then the second largest part is in Newton project, where 35% of all the volumes are going to be developed, and the Moods 23%. As you see, we have 3 locations in the city, which is allowing us to manage those projects in a very efficient manner, because it's not many projects scattered around in different parts of the city. It's very concentrated development in the areas which are of very high demand among young professionals, young families, and students and younger audience. So that would be so much about our project pipeline.
Just to add a bit about KAITA International and what we are working with. Before that, starting with what we start from. So around 5 years ago, when we saw that in Vilnius we have a successful business case in co-living micro unit apartments, we already said for us that there is no enough place in Vilnius, and we have to scale it, and especially when we are looking to the Europe and the houses prices, affordability of the housing, that's the way, and the mobility of the young professionals. That's the way we're looking to our international development, international projects, and international co-living projects. So we started from the 5 countries, from Latvia, Poland, Czech Republic, Sweden, and United Kingdom. And as a result of that work, right now we have one property in Prague with 170 units. And as Jonas mentioned, it's almost fully occupied. In Riga, 174. It's fully occupied just during 1 month from the start of the operations. And in London, we have 150 units, which is right now under construction phase. And right now, last month, actually, we signed an agreement with senior provider for the loan for the whole development stage, and contract. We signed a contract with a general contractor for the construction part. So what all around these 3 projects and all around our co-living projects, we are working, as Dalis mentioned, with conversion projects from hotels, offices, health centers. We are bringing the existing buildings to the new life, and that's our way how we are looking for the to the co-living, micro apartments, or co-working properties. And what is one more important thing to add, that in every country we are working with the local partners. We're working with local financial providers, with local banks, and we are recognized among them that we are bankable, you can say, and our projects are bankable, and we're going to the right direction. So, as just one more thing to add, as Jonas said, in Prague and Riga, we already started the preparation for the exit for the both of these properties. In London, we're already talking with the parties about forward sell models. So for each property, it's in Vilnius, so it's Prague, Riga, London. We have a separate exit strategy, and we are implementing not just then the property is fully booked or way before that, searching for the best way to find the best exit strategy.
So regarding pledged assets, so the 2 subsidiaries will be pledged in favor of bondholders and receivables from KAITA International. As you can see, the market value of real estate, Namų plėtros projekte or MUTS project is way higher. It's 16.6, and keeping in mind that we have a project GDV of roughly 22 million, so it's nearly it's in a very advanced stage. And Miesto Form and Off project has a GDV of roughly 32 million, and we have a valuation of 8.1. So we are planning ahead in 2026 and 2027 that the value and the contribution to net value will rapidly increase regarding Miesto Forma and Off project. So keeping in mind KAITA International receivables, so we have totally developed projects, and the gross the value of those 2 projects are roughly 33 million euros. As I mentioned before, we have a timeline of 2 years, and we have a track record of stabilized net operating income. So we have all the tools to organize the exit. So pledged shares net value is 5.5, and pledged receivables 2.3, and we have all these three I would say collaterals to secure or to make the redemption.
That's just a small visualization of a project. I guess we could quickly skip it and move towards KAITA Group, maybe focusing on the main UBOs of the group. Yes.
Yeah. So just to add a bit, so KAITA Group was established by 4 partners, and all of them are right now and before that in the future on hands-on on the business. So all the experience what we have right now and know-how we built it together. So our model is not from work from Maldives, but work from the office, and our board is with the 5 members. 2 of them is on this table right here. So that's our main focus on the work what we are doing. That we are doing by hands-on model.
Okay, so I will quickly go through the financial results for the financial figures. Actually, when we look into the income statement and the fluctuations, we need to take into consideration that the financial statements are prepared according to the business accounting standards. So, which says that the revenue is recognized at the moment when we complete the notarial agreements and issue invoices, which is very tightly linked to the closing of the project. So we can see that the fluctuations are quite big, but they are related with how we complete the projects. So in 2023, we were partly closing the project which was started 3 years earlier. And so therefore we had revenue of 4.1 million euros. And so in 2024, there were no closures on the project. Therefore, the revenue decreased down. So we just sold a couple of assets that were still on our stock. And so this year, we again completing the project to 100%. So we are selling out the remaining assets of this project. So we have a revenue increase, and we will see more revenue at the beginning of 26. So, but I think more important to look into the balance sheet and to the assets of the company. So if we see the consolidated assets of the balance sheet, we can see that it was growing from 23 to 24, which shows that we were developing the project, and so the assets were growing together with the development of the projects. But also we need to consider the fact that assets are not revaluated at the market value. So what we see in the balance sheet is the cost of our investments, the line inventories, work in progress. So it shows our consolidated investments into the projects which we are developing. Just the note that in 25, this part decreased slightly, but this was mainly related to the fact that one of the projects is not consolidated into the consolidated balance sheet, as our shares are below 50%. And on the other side of the balance sheet, so how we are financing, so our balance sheet, so part of the payables, so we're about 13.5 million is related loans which are considered as capital because they are maybe subordinated against other creditors. And most of the senior lending, all the senior lending is in SPVs, so on the project level. So on the consolidated balance sheet, we see the full picture, but the senior loans are in SPVs, while junior loans are mostly in KAITA Development on the standalone basis. And so if you go a little bit deeper into this SPVs, which shares are pledged, so the 2 projects, namų plėtros projektai, which is the MOVES project. Actually, as we see from the balance sheet, it's almost developed. So the investment is already over 13 million at the moment. So the full completion is expected the second quarter of next year. So also the sales will start at that point of time, the completion. While Miesto Forma is the off project, so it is still at the initial stage. So we in the balance sheet we see the what we have purchased and the initial investments into the zero base, which is the groundworks. But as now we have all the financing needed for the project, so I think every month we will see the increase of the value by half, up to 1 million euros per month. So there'll be the biggest value growth in this SPV.
Thank you, Mantas. And continuing with the risk factors, of course, we really encourage all the investors to go through the risk factors. Here we have only the summary, the headings of identified separate risk factors. Full description is available in information document, so please familiarize with it. Of course, maybe to mention, to focus on the main, what's most important where the risk arises is, of course, the real estate market itself. It is a rather fluctuating and cyclical business. Of course, developing into the more active phase in recent years. But what we have seen in the last couple of years, what Mantas already mentioned, is that we saw a slowdown in the sales of the apartments, which was mainly related to the increased interest rate. So these macroeconomic factors, monetary policy decisions are quite strongly reflected in an overall market sentiment. And of course, this is one of the main, I would say, sources related to sales of the properties, which is, of course, directly linked to the redemption of the bonds. Development risk, construction, yes, these projects are under construction. However, especially the pleasant ones are in more advanced stage. So we could say that the risk is rather limited, but of course it's still not finished construction. So delays or any other incidents are still possible to keep in mind when evaluating risk profile. Other risk factors related to the securities are, I would say, more standard ones. So related to secondary market values. As mentioned, bonds will be listed on First North Stock Exchange. And if investors are seeking to sell the securities before final maturity, of course, price can fluctuate depending on separate factors such as interest rate in the market, inflation, liquidity. So investors simply have to keep in mind this if they decide not to keep the bonds till the maturity. So before finalizing with initial going through the slides, presentation part, before Q&A, we are coming back to this slide of terms and conditions. Just to one more time point out the main aspects. So as mentioned, the total issue program is up to 4.5 million. First tranche, which is running till next Thursday, 18th of December, is 3 million euros. Issuer is offering investors 10.5% annual coupon, which is paid in a semi-annual basis. So bonds, after the placement ends on 18th of December, the bonds will be registered and issued on the 23rd of December. Regarding security, what was already covered more than once, security is provided by collateral of two types of assets, project SPV shares and also receivables. In addition to that, we have several covenants. One is related to collateral value, which talks that at all times
till end of 2026, loan to value ratio has to be up to 60%, starting with 27, up to 50%, and also equity ratio, consolidated equity ratio, has to be above 30%. Early redemption option, that's what I have already mentioned. Issuer has a possibility to redeem early after 12 months. And finally, as mentioned, the listing will happen. The bonds will be listed on First North Stock Exchange, most likely in the beginning of next year. So, yeah, these are the main slides we wanted to cover, and then we can switch to Q&A. You also can still submit more questions. So first is more general question related to current market situation. How do you currently assess the market for project sales, so flat residential property sales, and what are your expectations for the coming years? Is it improving, deteriorating, or stable?
So from the market perspective, what we see in general that from 2024, the middle of 2024, it's due to interest rate decreases. We looking at all the buyers, or a lot of buyers are looking for new properties, and especially in this year, we are looking at around 10% of the projects prices are going up. Actually, that's the same situation with our projects too. So during next year, what we expected, we have few things coming up in Lithuania. So one thing is the pension funds. They are released to the persons which they are looking to take it, and as we saw in other countries, that it should be some trend or some push to the real estate market. And another thing is to our central bank is making some changes with the policy of the first buyers to have less first part of the payment deposits to the property, so it will push the real estate market to the more active one. So at the time, looking from this perspective, we are looking to the very active market, and we see that the main thing is to have right now the building. The properties with the building permits, which can be built right now, and to have a solution for the potential buyers to build now and to buy properties now at this moment when they are finding that the best time is to buy now because the price are going up. So that's the main general.
I would like to add one more aspect. That usually economies in Central and Eastern Europe, they tend to have a challenge of going from a low cost economy to high value added economy. And what is very characteristic currently in Vilnius city is that the sectors like laser technology, like biotechnology, electronics, e-commerce, these industries are very rapidly growing, and they are attracting talents not only from the Baltic region, but I would say all over Europe. And this is why one of the reasons why Vilnius is among top 20 cities in the world in terms of talent attractiveness, because there are a lot of opportunities here to earn money, to make career, and to have a quality lifestyle. And this is a group which is coming not from within, this is coming from outside. A lot of Lithuanians coming from other countries, a lot of foreign talented people are also coming to Vilnius as they are finding lucrative and attractive jobs there. And this is also creating additional demand for residential solutions, and they are keen buyers of apartments here.
Thank you. Also, we have question regarding sources of redemption. So it was already mentioned that kind of two alternatives. So first one is project sales, another one is that international arm receivables. So how will redemption be allocated across primary funding sources? Maybe you have already proportion which will come from domestic versus abroad. And also related question is what measures are in place should the project sales underperform, maybe be slower? What are implications for the redemption? So again, maybe talking about redemption alternatives more.
So we have extra value, extra sources, extra funds, considering primary sources and not taking into consideration additional sources. But as we can see, primary is primary, and we see that build to sell should cover the bonds, and the funds should be more than enough to cover the bonds. But we just taking from the collateral perspective, and we see the timeline that it could be an additional sources from KAITA International, and of course we manage our cash flow and on a day-to-day business and basis and we plan everything. So if we see that we have additional cash and additional funds and we don't, and we just make a decision to do early redemption or just.
Maybe also worth noting that these real estate projects are planned to be finished and in advanced sale process already by the redemption date. Yes. So for moods also you have preliminary sales of 40%. So it's advancing and 60. Okay.
68.
Okay, sorry. For another 141. So it's
41 for two other projects. So yes, we see the timelines and we just think that those are potentially the primary sources.
And the terms are matched, so that's why we are taking the 2 years term bonds, because we see that the completion of the projects is the end of 27. So therefore, the inflows and the maturity of the bonds, they're matching.
okay. Yeah. So we already touched a related question. How likely is that early redemption would be used?
So anyway, we plan that the incomes will be the second half of 27. So these inflows will be used to redeem the bonds. So so we will see when it will be approaching. So.
But I guess for liquidity needs, the investors still should take a more conservative assessment and use in modeling 2 years maturity. Yeah, so talked about collateral. So we have several questions about collateral. Can you elaborate on the quality and valuation methodology of pledged assets? Also related question, how does the company monitor the pledged share value during the construction phase? So maybe let's touch a bit how this value is established.
Okay, so the valuation, in principle, of course, the valuation is done according to the standards, valuation standards. So they cannot go away from the standards, but in principle, so the market value is taken of the flats, and actually it's quite easy to say that the valuation is good because we already have sold 41% and the value is and what we are selling, the prices of our pre-sales is matching the valuation or even above the valuation, because usually the valuators, they have some conservative view on that. So I think that the valuation reflects the fair value and the real market value of the properties.
Yeah, but so maybe just expanding how we arrive at the SPV share pricing is it's defined in the information document is that the value, it started with property valuation, what Mantas touched. So appraiser has to appraise at least once a year. what's the value of the property of these project companies. When you have established value of real estate under the balance sheet of SPV, you add the cash which is outstanding on a reporting period, and then deduct all the payables by that SPV, excluding, of course, payables which are subordinated in the benefit of the bond holders. And this is the formula which is used to determine what is called in the information document net value of the shares. So it can fluctuate depending on, of course, on the property valuation, which is linked to the development stage, and can fluctuate depending on the balance sheet and payables. If it's increasing, decreasing, it also has effects.
It's not like fluctuation, but more like growth towards the end of the project, because every month we are completing more and more investments. So this also grows the value.
Yeah. Okay, so we have one quite technical development construction related question. Can you explain the difference between parking spaces? How do you decide the number of parking spaces per different project?
In general, in Vilnius, we have some regulation that in every areas we have a different requirement from municipality how much of the parking we should make during the construction phase. So it's regulated. Then if it's more than in center, you have to make less parking spaces. If it's more from the center, you have to make more parking places. So it's out for one apartment. We have every apartment have their own requirements for the parking places due to areas.
Okay, so yeah, in residential sleeping districts, a bigger count of parking spaces, near the center, a smaller count. Yeah. Okay, yes, and then another last question now we have is regarding again pledge. So why there are no first rank pledge on Latvian real estate? So maybe it's a very specific question, but maybe let's talk broader. Why shares, not real estate, and why shares in this development SPV is not international shares?
Could you please repeat the question, because I heard
Why there is no first
Latvia.
why there is no first rank pledge on Latvian real estate? So that's original question. So
Okay, so we have senior financing in Riga, Latvia. So it was provided by a local bank, which is, I would say, operates also in Lithuania and Latvia. So the pledge and the first rank pledge is there in Latvia. So we have receivables, and we think that it's like the clear, very clear source, and we will pledge that those receivables in favor of bondholders, and we have two objects to cover to cover that. I would say to return that loan to the issuer.
I would also add that our approach to financing is that we are trying to consolidate, our financing, solutions to specific projects and not to have intersections. In this specific situation, I mean, this receivables is in a way related to Latvian property, which is representing a completely different subholding, different business, and so on. But I mean, if we see a possibility, which is, we are considering as a attractive and reasonable pledge, we are connecting this to the set of our pledged assets in this case. But we are generally, in all the bond issues that we have had, we are trying to avoid intersections and interconnections between different subholdings, because it is not allowing us, to achieve transparency. I mean, when we were developing the holding and subholding structures that focused the development business, international business, local co-living business, and operations business, we have done this based on the market feedback that please make the structure as transparent as possible, and we are therefore trying, to implement this transparency element in the financial structures that we are offering to the market in the case of bond issues.
I'd like to add a bit like in Latvia, we have around 5.3 senior financing, and we have total valuation of 12 million. So when considering funds from KAITA International, we're taking into account that first of all we will return funding to a senior lender, and afterwards the value and what is left will go back to KAITA International, and from KAITA International to Vishu. So we have calculated all the financing and what is left after it. So
And maybe also just touch on your financing structure. Could you comment on a senior level, how much loans do you have and what's the average LTV on senior level? Because this is a junior bond, so and how LTV is higher when you include junior. So maybe Mantas, you could comment.
Yeah, so in most of the projects on the SPV level, we have the senior lending, and it's fluctuating between 40%, 40-50% in the co-living projects to 60% and above in the development projects.
Okay, so and above that, then you have this.
And above that is then it's junior, which is then measured on this ratio, this value ratio, and the junior loan. So that's why we have this covenant, which shows how much of this value is covered, covers the bond obligation.
Okay. So yeah, thank you for that. Also, this was the last question. So just to summarize our webinar, once again, the offering is running till next Thursday, 18th of December. If you still have questions, do not hesitate. Submit it to either Orion or the issuer. We will be more than happy to answer it. And yeah, if you take a decision to invest, it is possible to submit a order to subscribe for the bonds through any bank or financial brokerage company operating in the Baltics, so Latvia, Estonia, and Lithuania, who is a member of NASDAQ infrastructure, so pretty common process. So yeah, once you make a decision, you can submit an order quite easily and conveniently. And with that, I want to thank you for your participation. Also thank the issuer. And yeah, have a nice remaining of this already ending day. Okay, thank you.